Dirty dealings, corporate battles, consumer woes. This is Evening 5. The government has decided to once again extend the freeze on foreign worker applications. Home Minister Datuk Sri Saifuddin Nasution Ismail said during a joint press conference with Human Resources Minister Stephen Sim today that the current number of migrant workers, including those with approved quotas, awaiting entry and those registered through the government's Recalibration 2.0 program, is expected to hit the ceiling of 15% of the country's 17.1 million labour force by December 31st. The hiring of foreign workers has been frozen since March 2023. Meanwhile, Sim said Putrajaya expects to roll out the multi-tier levy mechanism for foreign workers next January. Details of the mechanism, including the thresholds used to calculate the levies to be charged, would still need to be ironed out before it can be presented to the Cabinet. He said his ministry, the Ministry of Economy and other relevant ministries are studying the mechanism. According to Sim, the rationale for implementing this is to provide an incentive to entrepreneurs and companies to reduce their dependence on foreign labour and in turn employ local labour in line with government's policy direction. Public Bank, Malaysia's third largest lender by assets, posted a 3.5% decline in first quarter FY 2024 earnings, mainly due to higher personnel costs and higher provisions. The group's quarterly net profit came in at 1.65 billion ringgit. Net interest income rose 2.8% year-on-year to 2.73 billion ringgit, while non-interest income edged up 0.5% to 649.64 million ringgit. Tapping on the improved economic outlook, the group said it will continue to take a proactive approach to embracing growth opportunities. However, it also cautioned of downside risks, including weaker than expected global demand, geopolitical conflicts and volatility in global financial markets. Amid the uncertainties, the bank said its treasury operations will remain vigilant in its business approach and will maintain a prudent risk profile while further strengthening its risk management capabilities to weather ongoing market risks. Its Managing Director and CEO Tan Sri Tealik said the group will also continue to pursue digital transformation and further step up its ESG efforts to remain relevant in today's dynamic business environment. Economy Minister Rafizi said Bumiputera mandated agencies will move away from giving out grants to providing financial leverage and assistance for business expansion. The move by Teraju, Yayasan Peneraju and Equinas is aimed at ensuring that support will only be channeled to high-quality and resilient Bumiputera companies that creates value for the national economy in the hope that they will eventually qualify for listing on Bursa, Malaysia. Rafizi told reporters after the Scaling Up Bumiputera Value Creation event today that the government no longer wants to give out free money. The minister acknowledged that it will take some time to convince Bumiputera businesses of the new approach, as it may be seen as a denial of their allocation. The stricter approach, he said, could be the catalyst for competitiveness within the Bumiputera ecosystem. Earlier, Rafizi announced the realignment of the three agencies, with Peneraju to focus on talent development, Teraju to provide financial assistance to grow Bumiputera companies, and Equinas to continue to drive wealth creation and Bumiputera economic involvement through corporate equity ownership. All three have been given targets to achieve by 2030. Bursa Malaysia is rolling out trading reminders, a new tool that flags unusual trading activity in addition to queries issued over spikes in share prices and trading volumes. In a statement, Bursa said that there have been instances where share prices and volumes remain volatile, despite companies saying there were no new developments in response to its unusual market activity queries. It explained that the trading reminder flag aims to alert investors so that they may exercise caution when encountering monitoring such stocks, which continue to display persistent, unusual price and/or volume movements. Bursa noted the latest initiative complements the existing multi-pronged approach to market regulation to protect investors, including engagement with participating organizations to address irregular trading concerns. The exchange also retains the option to issue market alerts and designations, which caution investors on stocks susceptible to excessive speculation or manipulation. A market alert is initiated to caution the investing public on possible irregular trading activities of a particular security. Securities will be declared as designated securities when excessive speculation and abnormal trading patterns emerge. Trading could continue under the label, but would require upfront payment before buying and a free balance of securities before selling. Kuala Lumpur Kepong, or KLK, Malaysia's third largest palm oil producer by acreage, said its net profit fell 39% in the second quarter of FY 2024, as the same quarter in the previous year was partly inflated by disposal gains. KLK said in an exchange filing that its earnings for the 3 months ended March 31st totaled 117.07 million ringgit. Last year, it booked a one-off gain of 72.9 million ringgit from the disposal of the paper chemical business in Europe. Revenue, meanwhile, was down 9.8% year-on-year to 5.46 billion ringgit due to the decline at its oleochemical division. KLK said the group will continue its ongoing policies to improve on yields, costs and productivity amid the global uncertainties and challenges. Overall, losses at its associate Synthomer and its poor results at its manufacturing segment are expected to continue dragging on its earnings, KLK flagged, though its mainstay plantation segment should see stronger results.